Hey guys, welcome to this video. Will Sebastian here from Be Profitable Trading Academy. Don't forget to get my free training underneath. It will change things for you for the better. So what have we got here? Well, quite simply, it's the XAUUSD ticker or gold. We've got Fed's Jerome Powell making lots of comments. I did just do a stream. Many of you probably watched it, but I thought I would post a video on gold for anyone who didn't see that, and I'll probably upload it later to YouTube. So don't forget to check that out as well. So Fed's Powell, you've got the US news. They're talking, well, you had Goolsbee before that, Fed's Goolsbee talking about how inflation is where they want it, things like that. You know, just basically saying that there's less fear in that US economy. You've got the greed and fear index, if many of you know what that is, basically a scale of what people are doing, or the sentiment or mood of the market is way up on the greed side. In other words, people are getting greedy, they're buying and buying and buying. And these poll comments that are coming now, I expect spending and output to slow over the next year. It's premature to say monetary policy is restricted enough. Fed will raise rates again if they need to. All of it's feeding into the overall market sentiment and, you know, this real push up in the value of gold. So you can see gold now, you're getting minor price rejection right up top. That is fairly ideal for entry confirmation in my eyes, or in other words, some kind of idea that you may see it fall soon. Of course, as I discussed previously, if you're looking for short areas, you've got to do it within the lines of reality. You've got to do it where you've seen people short before. That is what makes trading probable, okay? Now, it's not the case that it's simply, oh, I saw the price fall there before, so I'm going to look for it to fall again. The idea is that you've seen what people are actually doing behind the scenes. You've seen the actions of traders, because the actions of traders there is clearly pulling off those longs. It's this discussion in their internal brains where they're saying to themselves, you know what, and they'll be doing it again now. I've got so much profit on the move. I bought it perhaps at 18.20. I've got $200 or so of a move up. I want to liquidate. I've seen people liquidate there before. And therefore, I know that because people are selling at this area, they must be pulling off their longs at this area, and therefore it is a preferable price, okay? That is the difference. That is the key here. That is what makes sense, right? You're pulling your orders out where it makes sense to do it, because it's a non-negotiable fact that that is a short zone, because you've seen price fall before. So that's where my bias is formed by. Now, the second part to this, and perhaps something that's really important, is that we're not pretending that gold can't go higher. If anyone's going to jump on and comment and say, wow, yes, but gold could go higher, I agree. I think gold could go higher, and I think it probably will at some point. I think it's definitely going to beat these highs at some point, because they have to break. There's never been a time in the past where gold hasn't broken its high. It always has, eventually. Okay, but that doesn't mean you should buy here, because if you're buying here, then you are guessing whether this is going to go up or down. And you've seen, based on probability, it goes down. Okay, so naturally, if you were buying this, you're not only buying what would be a high price, you're also buying into resistance. You're buying where other people disagree with you en masse. Okay, and it doesn't really matter what you think. If you've got the larger money market selling against you and you're buying into it, then you're feeding into their profits. Okay, so you've got to be careful with that. Now, the other thing as well is, of course, if you're not liquidating your long side entries, you think that this is a long. So if you do have it long and you're in profit, it may be wise just to lock in those gains, because otherwise you're holding into where people have shorted previously. You're holding into what is a short zone naturally. And like I always say, if you don't believe me, take a look back. It's there to be seen. So the retracement you've got at the moment is 100% of the previous fall. You came off key long zones where we looked long previously. We said, wow, okay, that's great. You know, we've got key support to the left-hand side. We've got our key 200 MA, rocket fired back up, and you're surging into it. So it is a good idea to be quite cautious. You can see now what we saw as early entry confirmation is seeing rejection to the downside. But in any case, in my opinion, you've got short market value here. If you're shorting where you've previously seen that mammoth fall before, then it's still viable. But do not pretend that you can't get higher, because you absolutely can get higher. If it does come higher, I would simply add to my entries. I would simply DCA further, and I would do all of this with very light sizes. Do not, I repeat, do not take a massive size short because you think it can't go higher, okay? And if it does go higher than those highs, still don't take a massive short. Just make sure you're being risk averse. Take a lighter size. You will find that if you do so, you just last a longer time because you're going over the long-term variance of the market. You really need to be taking a basis off the larger amount of trades because that is what makes success. Thanks for watching, guys. Don't forget to get my free training underneath as always, and I'll see you in the next one. See you there.